CVS, fourth quarter earnings surpassing expectations, but the pharmacy giant is not immune to higher medical costs infecting the healthcare sector, cutting its full year profit outlook. And for more on the impact of medical costs to CVS and what it means for investors, we've got Jessica Tassin, who is the Piper Sandler healthcare analyst, here with us. Jessica, great to see you. As you kind of review and go through this quarter, what jumps out to you as impacting this company's outlook?
Yeah, so I would call this a better than expected quarter and a clearing event. So in the fourth quarter, you saw medical loss ratio come in at about 88.5%, which took the full year number to 86.2, or about 20 bips ahead of guidance. That's just reflecting, again, continued cost pressure in the Medicare Advantage business. I would say, importantly, CVS had telegraphed the potential for this MLR miss to occur during a public appearance in January. So we think that the MLR miss was anticipated, but what maybe surprised some investors was that the pharmacy and consumer wellness business was able to more than offset the headwinds in the insurance business to ultimately drive a 4-cent EPS beat versus the high end of the 2023 guide. So I'd say the important takeaway for us is just, again, the power of the diversified business model. We think that there are natural hedges built into the CVS business due to the company's unique combination of managed care, pharmacy, and healthcare delivery and services assets. And we saw that in the fourth quarter.
Yeah, Jessica, talk to us a little bit more about that, the hedge that they could have or they do have in your belief, given the diversity of their offerings when it comes to the outperformance that maybe we saw on a relative basis, given the fact that they did forecast a lot of the troubles that they were seeing. What does that transition year then look like, do you think, for CVS?
Yeah, so I think what's important is just that the pharmacy assets and their healthcare delivery and services assets have the potential to mitigate some of the cost pressure that we fully expect to see in the Medicare Advantage business in 2024. Again, we saw evidence of that in the fourth quarter, where the pharmacy and consumer wellness business was able to more than offset the softness in the insurance business. And we'd expect that dynamic to continue in 2024. In 25, it becomes even more compelling a story in our view, as you have the recently acquired Oak Street Health assets continuing to scale and again mitigate or helping better manage costs in the insurance part of the business.
And so within that insurance part of the business, I mean, we've been watching a lot of the insurers who have been reporting over the course of this season kind of get hit on the amount of people that are just coming in and needing to take advantage of specific services. Kind of long-term prospects here, how much of a weight do you believe that still could have over the future and coming years as we're thinking about aging population as compared to years and decades past, I guess?
Yeah, I think it's an interesting question. So what we're seeing is a combination of things in 2023. You have a rebound in what's considered kind of normal or healthy utilization, right? Seniors who hadn't been getting elective surgeries because of COVID are now returning to outpatient surgery centers and having things like hips and knees done. In addition to that, you've got utilization of supplemental benefits in Medicare Advantage. So things like dental and hearing benefits came in perhaps above expectations in 2023. So for 24 and 25, looking out, I think the managed care companies have largely anticipated a continuation in what they consider healthy utilization. Again, things like outpatient surgeries for elective procedures. In addition to that, I think just given the experience in 2023, you have a better forecast of utilization on the supplemental benefit side. And then as we look to 2025, right, you have again, these trends continuing, but the potential to price more favorably for the continuation of that utilization.
Jessica, what about the pharmacy side of the business? Clearly, a lot of these pharmacies are understaffed. They've had trouble getting the workers that they need inside the doors, the long lines. We also know what played out in Ohio, where they were fined about $250,000. How big of a challenge is that for CVS in the short term?
Yeah, so I think CVS has actually implemented a number of efficiency initiatives at their retail pharmacies, and they're at this point the predominant retail pharmacy in the country, right? I think 85% of the population lives within 10 minutes of a CVS. So I think the company is beginning to appreciate that these 9,000 retail pharmacies have the potential not only to support retail prescription delivery, but also to be a site of care for the vast majority of the population. So I think these are unique assets. CVS is benefiting from pressure or the bankruptcy of competitors, candidly. And I think that they are better managing workflows within each of their pharmacies to allow pharmacists to practice at the top of their license, to consult on medications, to deliver vaccines, and to act as care delivery providers in the community.
Certainly. Well, they have struggled in that part of the business, at least just in terms of getting the staffing to the levels that they need. Jessica, great to have you. Thanks.